My drip.
A lot has happened since you and I last spoke on this stream, Bradford. We're pleased to be joined by Joe Tenkmeyer last week. He did a great job stepping in, but you were busy in Austin. So we're excited to hear about the shareholder meeting. Lemonade also reported earnings last week, up 35% in a day, which was a bit wild. So we'll unpack a little bit of that. A lot of other Tesla news that we'll recap. But Bradford, good to have you back with us.
It's good to be back. I don't have my drip with me. I guess I'm not dripping today. So I got some merch at the shareholder meeting. Tesla bomber jacket that had sold out online. They still had some at the shareholder meeting. Got me a cowboy hat, a couple of Optimus, a few other goodies that I showed off in a recorded video on our channel. It was great to tour the factory and be at the shareholder meeting.
Yeah, and the drip thing is cracking me up because so we work with some college age kids. One of them's graduating. I shouldn't say kids, but some younger kids who are a lot more with the current slang than you and I as sort of elder millennials. So yeah, one of them in the group chat was saying, "Oh, Bradford is dripping right now," and I was like, "What does that mean?" And then thankfully you asked, so I didn't look like an idiot. And then we learned a new word. So always getting smarter every week.
So I'm gonna test our device. Someone's saying their audio isn't working, but I'll check it out on my device. Be unprofessional. But yeah, we do work with some young whippersnappers. Professional. Here we go. Yeah, it works.
Yeah, I'm pretty sure it's working. Yeah, so let's talk a little bit about the event. So I know you already did a recap video, and several others have too, about the vibes and everything like that. So let's maybe steer clear of that. But what was the kind of takeaway from you? I mean, obviously Elon's pay package being approved, big deal. I think we were all kind of excited that we're going to have him kind of invested mentally in creating value for shareholders. So that's definitely a good thing. But what are the other takeaways that you had from the event?
Yeah, so seeing the Gigafactory was cool. The shareholders seem to be in a good mood. People were a little bit tense, waiting to see how the vote would turn out. There was no disclosure from Elon or others before the vote as far as like the early voting, so we didn't have that benefit. So I'd say people were a bit tense around that. It was really cool to see the Cybercab, how that fits together. So the unbox process, what are actually the four parts. We showed that in a video. We had some Twitter posts on that on Twitter. I was glad to hear a little more about Master Plan Part 4, because I did think it was a bit vague what Tesla covered when they talked about Master Plan Part 4 originally. So Elon gave us a little more meat on the bone, and he talked about the chip making factory, and maybe Tesla will have their own chip making factory. I thought that was a really big deal. Also,
so let me pause there for a second. I've got this a little PTSD with exciting new projects, new business lines. Like we've gone through this with 4680. We've gone through this with a lot of the kind of Elon promises on FSD. I agree, Farzad. Intro was great until Farzad said, or until Bradford said dripping. Yeah, you're giving elder millennial. That's another thing that Jordan told me. Yeah, I don't understand how to use it, so I always use it incorrectly.
You just, the vibes is silent, so like you're giving vibes, but the vibes is silent.
I think you and I are really connecting with the next generation of investors right now. We're speaking their language. It's really, really cool.
So making chips like a real fab, like it's serious serious
It's hard.
engineering.
It's
It's
very hard.
extremely hard. Talking about things on a almost an atomic level, not quite, but making things as small as they do at 2 nanometers is, or maybe it's 4 or 5, whatever. That's really hard work, and you need to get the lithography machines and everything working and moving at high speed. So it did shock me a bit that um, Elon went to the chip makers like, "Hey, we want more chips. Give us as many chips as you can. Uh, we'll we'll even pay you for any more chips you can make beyond our agreement." And they're not getting more than they're asking for, even though incrementally it'd be very profitable for them to make them. So like they're seeing constraints as far as the chip makers.
Yeah, I mean, total flashbacks to like Gigafactory, the original Gigafactory days, and like, hey, we're going to need a lot more, batteries, and everyone's like, well, that's like the world supply of batteries. You can't do that. And he's like, well, I'll do it anyways, and just built the Nevada Gigafactory, which, if you go back to what they were saying that factory would do, I think by some estimations it hasn't lived up to the original kind of promise that he laid out for it. Was that back in 2014 or something like that? So I think the ambition is there. I'm jaded is too strong of a word, but I'll say I'm cautiously optimistic on what happens here. And I just don't want to give them full credit for having perfect manufacturing lines for these up and running and meeting all their chip demands internally. I think it's good that they're doing it, but I suspect it's going to be some combination where they'll still buy from the Samsungs and the TSMCs of the world, but hopefully they can get a decent yield out of their own factory as well.
Yeah, so I think Jeff Lutz was one of the first people to think about this after we all got talking more about Optimus as a community. You're going to run into limits when you go from like 100,000 to 1 million Optimus, and then you try to go beyond 1 million Optimus per year. You need 1 million more chips per year. So I am curious to see how it turns out, and I understand how you feel snake bitten by like 4680 and some other things, and are a little bit anxious about it. I'm also curious, now that they've admitted that dry electrode isn't working out, like how are they going to do with getting the wet electrode? Can they use all those lines they put in? How does that work? And I don't think they'll tell us. So I'm just curious how they're going to do. Elon has ambitions to increase production by 50% next year as far as number of vehicles produced. So from roughly 2 million to 3 million that's a major undertaking. And that's also 1 million more chips, but a lot of batteries.
Yeah, we're kind of getting back on track now. Back in 2020, there was the whole, we're going to have 50% growth in volumes for a decade, which got to 20 million by 2030. That number has been strangely absent these last several years. But, I think it's nice to hear the ambitions for meaningful volume growth in vehicles. And it probably sounds too aggressive to people who are FSD skeptics. But as I'm thinking about just how good V14 is, and like it still has some polish needed, so I don't want to be overly bullish without cause. Yeah. But I'm very confident they're going to get that sorted. And I also think Elon's time frame of 2 months to get you to FSD unsupervised in your car, that's probably overly bullish. But if it takes 4 months, 5 months, okay, like April of next year, you can text and drive or watch Netflix. That's going to sell a lot of Tesla cars, and that's going to sell a lot of FSD subscriptions as well. So I think ramping up in anticipation of that is really smart, and I do think we're kind of in the ramp up part of the S curve again for Tesla's deliveries and for their earnings power, frankly.
Yeah, I agree. I believe the rough edges around V14 will buff out. So looking forward to that. So Matt, where should we take it from here? I want to talk a little bit about pay package because I did see some signs, coming out of the meeting. People were talking about Elon's $1 trillion pay package, and true if the value does accrue and you hit all these hurdles, and it'll be very hard to do all the hurdles. But if both Robotaxi and Optimus are successful, it'll happen.
Yep.
And essentially, you'll have $7 trillion of value created.
Mm-hmm.
And people are focused on maybe how much tax Elon will pay. It could be $400 billion in tax that he'll pay. But then
that's crazy. I mean, for reference, I was looking up how much we've taken in tariffs since Trump took office, and it was something like 200 or 300 billion. Mm-hmm. So like we're talking about more federal, and this is just from Elon. It's not to mention the other many Tesla shareholders who are going to have gains on their shares too. So one individual paying more in income tax than the entire tariffs that are causing an impact to GDP growth potentially. Yeah. It's like this is a very big deal.
But I was thinking about the value that accrues to the shareholders and how much tax would be paid on that. So the top 10% of Americans own 70% of the wealth. And what that means is that the capital gains and from Tesla held in brokerage accounts, and there are people who say I'm never going to sell, but people will sell eventually. And withdrawals that come out of IRAs are going to be at those high tax brackets. So on capital gains, the high rate there is around 24%. On IRAs, you're looking at 26% or higher. It's likely going to be like 32% or 39.6%. Again, we're talking about the top 10% of Americans who are going to be in high incremental tax rates. So the Elon's getting 1 trillion, but I did some napkin math, and $2 trillion in taxes will likely be paid if Elon gets that 1 trillion, if all that value accrues just by everybody. So Elon maybe pays 400 billion, other taxpayers pay $1.6 trillion.
Yeah, I mean, this is the thing that drives me so crazy about seeing all these posts of like, oh, like nobody deserves $1 trillion, or like there was some like college debate, and one of the questions was like, should it was either billionaires or trillionaires. I think it was
should billionaires be allowed in the U.S.
or should they exist just like in general? No. So like what's implied by that question? Like, do we kill them, or do we just confiscate all their wealth above 999 million? Like it's just it's so crazy to me. And that somebody had a post about this which summed it up really nicely. Like, I think if you're in this camp, and like I think we can have nuanced conversations about income inequality, and because I think that is an important topic. But if you're just like this is like morally wrong for somebody to have that much wealth, like not taking into consideration what they might do with that. Like, Elon's not buying yachts. He's like literally trying to seed the Mars colony, but like nobody goes into that level of detail. But if you're in this mindset that like this is just like an affront to humanity, I think you are living in this like zero sum game where like if he's got that much, it means he's taken from somebody else, when like the exact opposite is true. If he's made that much, that means there's been a multiple more than that he's created for so many normal people, and you and I in our day job are just seeing that all the time. People whose lives have been changed, by the hard work of Elon and the rest of the Tesla team. So it's, I don't know. I get a little angry when I see just like these stupid takes of like, oh, this is immoral, and Elon is like that, like all the other, he hired a bunch of rocket scientists and then he's taking all the credit. It's like, oh gosh,
yeah,
you guys have no idea.
Yeah, he's created a lot of wealth and a lot of jobs. So 140,000 jobs globally would not exist without Tesla. and there's all the jobs at suppliers and people that feed those employees and cut their hair and educate their kids at school and all these other jobs. So I think there's like 3-to-1 jobs ratio for jobs that are created, these tag on jobs. So you're looking at over 500,000 people that would be out of work if it weren't for Elon Musk, which is
Yeah,
crazy.
that is crazy. Yeah, so you also had a pretty good post about the unboxed process and kind of the different panels that were pieced together. What
Mhm.
did you learn after seeing that in person, to the extent that they'd show you any of it?
Yeah, we weren't allowed to take any pictures or videos, so otherwise I would have done that. So I worked with my editor, and I figured out, okay, what let's color code on the Cybercab and show, okay, what pieces are with what. So basically found out that on the front, uh, up to the windshield is the whole front, and the tire and wheel that goes with the front. That's with the front piece. And then on the two sides, it's the door all the way back to the rear quarter panel, um, but not including the rear wheel. And the rear wheel goes with the trunk, the top, and the bottom. And essentially, I think it's something where the the side went into the rear and then the front came in, or maybe is the other way around, but it slid into place, literally just slid right into place. um, Tesla said they're going to bolt it into place. There'll also be some adhesive, so some glue, but mainly it's bolts.
Hmm.
So, the work that Toyota or whoever did to try and, reverse engineer this whole process that was unveiled on Investor Day in March 1st of 2023. Um, yeah, that's how it's all going to work. And it essentially slides into place. I think lock is a strong word. Maybe it does, but they will literally bolt it in place. Also, with the wiring harness, they will have each section will have their own wiring harness, and then there's a system that Tesla has created to connect those wiring harnesses together.
Yeah, I'm very interested to see a little bit more about that. I've been thinking, or trying to think through the question of, like, will they actually use Optimus on the line? And it seems like the wiring harnesses could be one area where, like, you kind of do need, like, hands to put them in the right place. Maybe they can figure it out without a human, or without Optimus. But I don't know. I'm pretty curious to see what this line looks like when it's actually fully up and running.
It was crazy though. Literally, the tour started, and the very first thing they showed us was how the Cybercab comes together with the four pieces. Like that was the highlight of the tour, and they started with that. It was crazy. So, and it's like less than 2 minutes that we got to sit and stare at it. So it's like, um yeah, is wild. I also got to see the working Model Y line. Is very busy, so they're at least running one shift of that in Texas, and seeing one shift in place. Like, there were a lot of forklifts running around. There were even traffic cops for the forklifts, so they were directing traffic and telling people when to wait and when to go. So it's very busy. It was like an ant colony. Um, it was very intense. Also got to see how the Cybertruck goes from a shell to them adding pieces to it. So, like, the 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 thing that the motor sits on. So, like, this plate or whatever that it sits on. Also got to see the air compressor going in and other pieces of the Cybertruck. So that it was really cool to see that, and just seeing Elon in a good mood. answering questions. Yeah, that was fun. Is a nice celebration. Farzad had something I'd like to point out. So talking about the this is pretty wild. Um, Not trying to trigger you, Matt, but a million optimists out of Fremont. I think
To
that's
me,
a bit surprising. California, like,
well, yeah, yes and no, but like the Cato Road facility is right down the road from Fremont, and that's like the test line for
mhm.
how to do the 4680 production. Um, we know it's going to be the most expensive, and I, I'm wondering if that has any implications for SNX. Those are produced there. They've got capacity to do was it? I think it's 25,000 a quarter. I want to say it's 100,000 a
Yeah.
year each. And they're running about 5,000, so it's like 20% capacity on those lines roughly.
So it's capacity for combined 25,000 or so.
Oh, it's combined. Okay.
SNX. Yeah.
Yeah. So, but like, regardless, however you cut it, like very under capacity, like Elon said this before, not really meaningful to the company's like strategy or financials at all.
Mhm.
And that is a jam-packed facility. So I'm wondering where that space is going to come from, and the SNX lines would be the kind of logical place in my mind. But we haven't heard anything about cancellation, and Tesla does have a history of kind of pulling rabbits out of hat. So I'm wondering if they might figure out a way to jam 1 million unit Optimus assembly line there.
I don't think it's going to be super big. So I'm guessing they can find a little space, but yeah, they compared Fremont itself to a can of Spam that was just kind of like bursting at the seams, where the can was keeping it, at a smaller volume than it would be otherwise. I when they said Fremont, I was picturing it more like being Palo Alto, so like being close to their AI HQ. So I wouldn't be surprised if it's in a separate building. In Silicon Valley, there are warehouses available
Mm-hmm.
throughout.
Yeah, that's a good point. So yeah, I mean, I think the bigger news in my mind was a 10 million unit line in Giga Texas. They're going aggressively on this, and Elon has very grand ambitions for how many of these they can sell. Yeah, it's like, as excited as I am about the getting to scale. Like, there's so much that needs to be done on the AI side, and getting that technology, that software. Like, the software is really the brains, obviously, of the Optimus. And I'm very excited to see more about that. Like, how does it actually learn on the job? How does the training work? Like, what kind of
Mhm.
directions can it handle? I feel like I'm a kid in a candy shop wanting to know all the things about how it's learning and how it's going to figure out how to do a job in the factory versus, like folding laundry at home versus like all these other things. So there's a lot we still have to learn on Optimus, but I think we can all agree that the market size and the opportunity there is a lot larger than Robotaxi. So as excited as I am about Robotaxi, just about to launch, it's like we've got good news upon good news coming up. It's a very exciting time to be a Tesla investor.
Yep. Maybe we could talk a little bit about Lemonade. Before we do that, there's some fake headlines around Tesla, like that there's some big sales drop in China. Um, One thing that I believe happened in October that the headlines were not talking about is, I believe there are 35,000 vehicles exported from Giga Shanghai. Um, so they talked about the low China sales. Well, Tesla didn't have much left over to sell to China because they exported 35,000. That's a lot of cars on ships.
Yeah, it is. So one other thing before we talk about Lemonade, I wanted to hit actually two other things. One, the there was a note out this morning about potential car buyers considering EVs, and it's at the highest level ever. So we're kind of at this moment now where all the other car makers are pulling back their EV plans, and now all of a sudden more and more consumers are seriously considering a cars or an EV. So the number of active car shoppers, this is active car shoppers who say that they are very likely to consider an EV is 24.2%. So EVs still have a very small percentage of the overall demand or a market in the US. But I think we're on the verge of this becoming mainstream.
Yeah. And this goes to the average price of cars in the U.S. We're getting close to like $50,000 as the average price for a new car in the U.S. And you can get a used Tesla much cheaper than that. I think at one point we were down to like below 20,000 on fairly fresh new Model 3s that maybe had a few miles on them, nothing terrible. So I'm not surprised that used car buyers are beginning to look more and more at EVs. And I thought this would happen earlier, but people are slow to catch on. The reason I thought it would happen earlier is the used car market is potentially 3 times larger than the new car market. So I thought used cars for Tesla would be in much higher demand just years ago.
Yeah. Well, I mean, I thought the same thing. And just to go down memory lane a little bit on that point, like, back in 2020, 2021, the net promoter score was like 94. For the Model 3 and for the Model Y, it was just like, and everyone who you showed your Tesla to was just like, oh my gosh, this is amazing. And it was, there was this line, butts and seats sell cars. And so it just seemed very logical with the net promoter score that high, and just with anecdotal evidence that, like, as 500,000 new customers went out into the world and like showed their friends and neighbors, that, that would convert a lot more. And so, it would be like almost like this, I don't know, biological phenomenon where, more and more went out, which, sustained demand for longer periods of time. To me, that seemed like a very logical kind of assumption about what would happen. But, I think that really resonated with some early adopters, but then there's a lot of, more normal people who were, maybe they thought it was cool, but, it seemed a little icky or uncomfortable for them to, not have superchargers like everywhere all the time, or to have like the stated range be 290 miles. And even though that works for their commute, it just psychologically, it was like a bridge too far. So
I think have buttons everywhere.
That one's interesting.
On the dash,
we need a knob in our touchscreen, then I'll buy one. Sorry, Ford, that was a cheap shot. But so, Tesla seems to be taking this, kind of education issue a little bit more seriously. One of the new programs they introduced, which I'm pretty excited about, is this Tesla rental program. So you can actually rent a Tesla, starting at $60 a day, including FSD and supercharging. So, this is just like a great way, I think, to get people to try it out. Now, I'm skeptical that this will reach a lot of people. I mean, if you're, needing a car rental or something like that because you're traveling, you're probably not going to like want to go to a Tesla dealership and like find one. So it probably will be for people who are maybe considering an EV. It's like you can do like a test drive for a while. So I think it's a good program, but I don't think it's necessarily going to be like an answer to all the companies' misinformation problems. So I still do wish they would take advertising seriously, but I think they're choosing to die on that hill.
Yeah, it'd be good to advertise for this at airports, especially like, as far as if you're going to offer these rentals. I don't know if they'll be able to hook up directly to the airports that way, but it's an attractive offer. I think Tesla though could said like drive it like it's stolen. They said drive it like it's yours. No, I'm just kidding.
There's so many things they could do. Like they've got such a great story to tell, and that's what's so frustrating is there's so much FUD and misinformation even still. I mean, so many years beyond which you and I and everybody watching this knew all the advantages of EVs and Teslas in particular. Still, so many people don't exactly get it. But
all right, so we are at the 30-minute mark. Let's talk about other things that are 30. So Lemonade, as you said last Wednesday, was up 35%. Is pretty shocking. It started up like, I don't know, around like 29% and just held strong that whole day. Why the heck was Lemonade up 35% in a day, Matt?
Well, they did pretty much everything even better than they said they would. Their loss ratio. So management has guided for a long time that they'd have loss ratios in like the 70 to 75% range. Last quarter, they came in at, this might be slightly off, but it was around 68%. So it's like, wow, like, when there's no hurricane or something like that, maybe they'll get sub 70, for brief periods of time. But this quarter, they posted an absurd 62% loss ratio. Which for those who aren't familiar with insurance, that just means for every dollar you take in, you're only paying out 62 cents. So lower is better. It's kind of like a corollary to gross margin. You want it to, but it's like the opposite. It's like 1 minus the gross margin essentially. So, for them to have grown the in-force premium so significantly, and to have loss ratios come down so drastically, it basically is validating everything that management has been saying for years now, that their AI pricing is going to give them, this a better data advantage, which is going to allow them to have their choice essentially of either like better margins or like faster growth, because you can undercut your competitors on price. And so they're at this weird spot right now where they've actually got both. Like their margins are phenomenal right now. And they're also growing well over 30% annually. So just a phenomenal quarter. They shared some stats. They always have some nice color coordinated charts, which are nice to see. And you can just kind of see these trends in real time. It's a little small. I actually can't quite see it. But essentially, that top one is the year-over-year growth rate. So you might say like, oh, that's a revenue chart. Like that's really nice. It's it's increasing. No, that's a derivative of the revenue chart. It's the growth rate. So the revenue growth rate is itself accelerating. And actually, this is going to continue happening partially because they're using less reinsurance because their balance sheet is so strong and their cash flow generation is so strong. So that's going to accelerate it. But the other piece is that they're spending more on marketing because they're acquiring customers so profitably that it just makes sense to spend a lot on customer acquisition. Right. Then this middle one is the gross loss ratio. So again, that's what we were talking about at the beginning here. And you can just see the steady improvement quarter after quarter after quarter, how much this is improving. And now it's to the point where, it's below the long-term guidance that management gave. And so, us Tesla investors, we think.
Can I talk about the bottom chart?
Yeah, you do that. And then I want to come back.
Yeah,
it's my favorite too, actually.
So the bottom chart, what the darker line that's flat is showing is their operating expenses, excluding their advertising. So when they advertise, they're basically investing to get new clients. Yep. So we want to look at, okay, how's the business look like, without that advertising expense? And it's been flat over the course of 3 years. But their in-force premium, which is kind of like a revenue, a way to look at revenue, or it's a
proxy. It's a proxy for revenue growth.
It's a proxy. Their in-force premium has nearly doubled. So you have a business where like their revenue is nearly doubled and their expenses have been flat. There are very few businesses where you can double your revenue and not increase your headcount or really increase your operating expenses. It's unheard of.
It is. And like, actually, I never noticed this before, but this whole chart is actually kind of an income statement, like line by line. So at the top, your growth rate is actually accelerating. So revenue growth is accelerating. Your loss ratios are improving, which is like your gross margin. So your gross margin is significantly improving. And then your operating expenses are staying flat. So like just run that projection forward a couple of years. Okay, accelerating revenue growth at improving margins and at flat operating expenses. Like that's like the dream of any investor. So yeah, it's such a compelling company. But on this loss ratio, one of the things Tesla investors say all the time is like, okay, this version of FSD is as bad as it's ever going to be, and that's true because we get these updates and it gets better and it gets safer and it gets more capabilities. And the same thing is true with Lemonade's AI pricing. Like they've built all this in-house. Like they're not going to some third party. They're not getting lucky with weather events. They're very intentionally choosing which customers they want to acquire, and they have very specific projections of exactly what is the loss ratio of this customer over their entire lifetime. And not even that, it's okay, how likely are they to switch carriers and basically leave us after 1 year? How likely are they to cross-sell into another product, which would have higher margin potential? So they've got all these estimates from their AI models going back many, many years. They're able to track that to their actual results and then say, okay, where did we get wrong? And how can we make our pricing model even better? And so like, this is like, these numbers seem really great, but like it also is just the beginning in some ways, which is crazy. So this is like, I honestly think Lemonade, taking a step back, is kind of like the poster child of how companies should be building themselves right now in this current environment. Because like they're using AI on their top line to like be great at pricing and like great at customer interactions, great chat bots. They're integrating voice and like that's all really great. But then they're also turning that experience back internally and say, okay, how can we make our own employees more efficient? How can we help them, do better coding? Our call center reps, okay, we want to have AI actually handle these. So we're going to turn you from call center reps into AI like training reps to get better at the customer interaction. Like where's the customer interaction not as great as we'd like it to be? And so then, you're able to leverage that one employee to do way more work, to handle way more, customer claims than was capable in the past. And so it's just like, we're at such an exciting moment in time. And it's just like, it seems very obvious to me that the way companies were built, Fortune 500 companies were built with like, your HR and your processes and all these different departments, like that's not going to be competitive 10 years from now. It just will not. And so I just think Lemonade's approach, where it's literally in their DNA, is the way all companies should be striving to reorient their organizations. In fact, they're kind of an inspiration for us with how we're kind of rethinking our own business. All right, I'll get off my soapbox, but I feel very passionately about this.
We're excited because Lemonade's just also beginning to turn on the spigot with car insurance. And earlier in the year, they weren't really pushing on that, but they've begun to do that. And the results are immediately dropping to the bottom line, where they're cross-selling or taking existing pet or renters insurance customers. They're dropping them an email or sending them a push notification on their phone. Literally costs Lemonade nothing except for like the people to figure out the right words to say, and they're saying, hey, why don't you get a quote for our car insurance? So the reason why this matters is typically it costs $450 to acquire a car insurance customer. That's how much in ads a typical insurance company pays to acquire a car insurance customer, or they're doing that with paying insurance brokers that. So this is a really big deal, and they're just starting to do it. So it's going to get better from here.
Yeah.
So it's like, this is the worst that Tesla V14 is. This is the worst that cross-selling is going to be for Lemonade. So it's becoming boring, predictable, but also their growth is accelerating, which is crazy.
Yeah, and like they've still got some work to do on car. So like car is their highest loss ratio product line right now. It's at 76% loss ratio, gross loss ratio. But a year ago it was at 92. Last quarter it was at 82. Now they're at 76. And so like you can see the trend. And so like, it's just going to get better and better. And that, by the way, makes the economics for when you try to cross-sell a customer even better. And so it's just like, it really is kind of staggering to think about all these advantages that they have, because they compound on each other, meaning, all right, if your car loss ratio improves, that means your overall customer lifetime value for a renter's insurance customer improves, because there's some probability that that customer will cross-sell. So that means like you're going to benefit more from your existing customer base and from your new one. So like there's those types of advantages. There's just like the sheer advantages of the AI is going to get better over time. And so like the loss ratio should come down. So the advantages compound on each other, but then they also compound over time. So as like the company scales and gets larger, because, you know, more time has kind of elapsed, then you go to this area where right now they're, you know, negative on earnings. Next year, they're going to be adjusted EBITDA positive. And in 2027, they're going to be net income positive. They're already cash flow positive. So there's no like liquidity risk. But when you start modeling this out over, you know, at least 5 years, the numbers start to get like really nutty. And like, so I published a thing basically saying our present value calculation is $192 right now. And so even after the crazy 35% plus run that we've had recently, the stock's at 79, I think it closed today. Right. We were buying it at like $17 to $20, $19 for clients, you know, last year when nobody cared about it. So like the stock has done this incredible run, but still we think like the amount of upside has actually increased, maybe not on a percentage basis, but on a dollar value basis. And so it's just like, I'm blown away by this company.
You could say it's a double exponential, Matt.
It is a double exponential. Well, yeah, that's the other thing too, is like, right now their average premium per customer is about $403, which is very small. The average for car insurance is $1,900. And the U.S. average for like, you know, what does a household spend on insurance is about $3,000. I think a little bit more than that now. So, you know, at 400, you know, they've got about a good 10x to go in premium per customer, just to get to the average. But right now they're really winning with, you know, the young 20 somethings who are just starting off their career. So speaking of compounding over time, just as those people simply age up, you know, and buy a house for the first time, and, you know, or add car insurance coverage for the first time, the premium per customer is going to increase very significantly too. So the fact that they can be this efficient writing like the cheapest like policy premium products, pet and renters, and still be so profitable on those lines. It's just like go through the thought experiment of, all right, what happens in 10 years time when a lot of those people age up and get married and buy a house, and you know, the company just has that much more scale, and they're built to scale right now. Like their operating expenses are intentionally built to be able to handle 10 times more volume in claims and everything else. So like, it's just, I think it's going to be an extremely profitable, extremely cash flow positive company by like 2029. I think it's going to just like shock people how quickly earnings is increasing.
But insurance is boring.
It'd
be hard to understand. There's like all this jargon.
There is a lot of jargon.
And the chart, if you look at the long-term stock chart on Lemonade, it still doesn't look good. So there's all these reasons that people have dismissed it. It's still not profitable, even though it's pretty mathematical from here, that they're going to cross into profitability, and very strongly so. So we're excited about it. We think Wall Street is obviously missing. Like Wall Street's always late. You know, they'll probably start talking about it more a year from now, but that's not when we like to find stocks. We like to find it before Wall Street's talking about it.
It reminds me of a conversation you and I had after the investor day last year, about this time last year, actually. We were walking out of the building, and you and I just kind of had our minds blown, like, oh my gosh, their technology like is legitimate. They've got the nuts in terms of the strategy and
winning hand.
The winning hand. Yep. And so we were talking, we just happened to walk out with this other guy from a more kind of traditional, I don't know if it was an investment bank or analyst or whatever. And he's like, yeah, like their technology is like real. And I was kind of skeptical, but like, I totally believe it now and yada, yada, yada. So we're like, do you think it's a buy then? He's like, well, I don't know. The price to book is already pretty high, so it's like he comes back to like these backwards looking accounting metrics when he's like, yeah, their AI chops are legitimate. It's just like, you've got to be forward looking as an investor. And like, not to say valuation discipline isn't important. It is. We've got an extremely detailed model on this. I'm actually going to be on Hans's channel later this week, walking through our model. So for anyone who's interested, you can check that out whenever that ends up dropping. We'll go through a lot more of the details. But yeah, it's just, I think you're right. The Wall Street's just going to be slow. And then like, once it hits them in the face with earnings growth, then they'll be like, we're going to raise our price target to, something more reasonable. We just saw this with Bloom Energy too, where, it went from $23 this summer when we were talking about it to, what's it, 130 now? And the analyst price targets along the way just mimic the share price. It's like very predictable. That's what's going to happen.
We are biased. You can check out our 13F report that reports on our holdings. Lemonade, we own just a little bit under 1% of the company. Maybe it's like something like 0.8%. So we are biased. So that we may trim and add along the way. So even though we're super excited about it, and we're feeling like each of the quarters is going to begin to like just get better and better, accelerate from here. There'll probably be some opportunities to do some trimming along the way, hoping to add at lower prices. There will be some setbacks. There may be some quarters where they have a higher catastrophic event losses. They were largely spared from catastrophic losses with the California wildfires, and the reason why they were spared is they got out a lot of the business because they didn't think it was very attractive.
They very intentionally tried to limit their exposure to catastrophic risks. And, in the past, I mean, I've been following this company for a long time. And in the past, the catastrophic impact was consistently a lot more significant. And then occasionally like drastic, like more than 10 or more than 1,000 basis points, which would take like a 70% loss ratio to 80. Like it was not super uncommon for them to have many of those. So, but they've said like for many years now, like that they're non-renewing a lot of those policies, that their newer versions of their AI is saying are more disaster prone, and they're intentionally leaving some geographies which are at higher risk. So like in my mind, management deserves huge amounts of credibility, because the stuff that they've been saying for years now, they're just consistently delivering on, and I would say actually over delivering relative to what they're promising.
So we got a question here, asking about the availability of autos. So Lemonade is approved in many of the states. They did buy Metro Mile, so they have the option to, so they can offer car insurance in nearly all the states. But the pricing of insurance in states varies widely and wildly. Each state has a different regulatory body and works in different ways with insurers. So Lemonade recently got into Indiana and Colorado. They're offering their insurance in Texas and a few other states, but they're not available in all the states, nor are they pushing that hard. It is also available in Illinois. But like they can't price their insurance the way they would like in a state like California. So in California, I think the insurance company set it up this way, the legacy insurers, but that's my tinfoil hat. I got it on right now. So the legacy insurers have set it up so that in California, you can't use things like driving behavior or things like that. You have to price the insurance very simply, so that prevents upstarts like Lemonade from getting into the game.
Yeah, yeah, and there's some quirks like in California, for example, you're not allowed to price your insurance based on the actual driving behavior of the insuree, which is kind of crazy when you think about it. That's Lemonade's whole proposition is, hey, we are going to like price discriminate according to your actual risk, which is like exactly what insurance should be doing. But the California law just makes that impossible. So, there are these nuances kind of state to state that they have to deal with, which can make the rollout a little slower than, otherwise we might like, but pretty cool. There was
Another
also
question here, Matt. Curious what signals you like to see to feel comfortable to trim a stock.
Yeah, so in general, I think we're looking at sentiment. We're looking at sentiment and also the fundamentals. So if there's if the fundamentals are weak and sentiment is high, that's like the best combination. So we try to keep an eye on that. Like realistically, what's going to happen with the company in the short term, like in their next quarterly report, let's say, not what we want to happen, but what do we think is actually going to happen. So we try to be very sober with our own takes. But if there's we think there's some potential weakness in the business, or even if there's not a weakness, but just sentiment's too high and the stock has run, too much, we might take that as an opportunity to trim. Now, some of it's also just portfolio management. So, we're managing many different pieces, or many different investments for a lot of different clients that have different risk tolerances. So, there's going to be some natural, just kind of, variances that, if a stock runs, a significant amount, it's very hard to maintain that over position sizing for extended periods of time. So there was one other thing I wanted to highlight today. So we talked a lot about like the numbers and like how like excited I am about when I dive into Lemonade's financials. But I think it all ultimately comes down to the product. And they're constantly pushing the boundaries in terms of their product. Shai Wininger, who is one of the co-founders and really I think the lead behind their AI efforts, he posted this video today, which is pretty cool, about what it looks like to file a car claim with Lemonade. So you can say, okay, you choose your repair shop. All right, there's a couple different ones here. All right, I'm going to select that one. And this is all comes from like the chat bot. So it's doing all of that. And then you type in the information about your car, review the claim. And then you can actually, like if your car is actually damaged, like you can, they can arrange for a tow truck to come and get you, like all very seamlessly within there. I've had to file a car claim before, and I've been on the hold for like an hour trying to sort it all out and get through all the information, waiting on hold for extended periods of time. And it's like a terrible process, which I guess you don't expect it to be fun. But to take something that's, a miserable situation, like nobody wants to have a car insurance claim, and to make it be as seamless as ordering a Tesla, Tesla changed the entire car ownership or car buying process from a horrible thing with the dealership to you can literally do it in 30 seconds on a phone. That's what Lemonade has done with the, insurance claim process. So they're never resting on their laurels, and they're always trying to implement the latest AI technology and improve the customer experience. So the big part of the reason they're going to be able to continue growing is because the experience is just so much better. I as a car or a homeowner's insurance customer, I've been very surprised and delighted several times, and nobody loves their insurance company, but I think Lemonade genuinely engenders that feeling from a lot of their customers.
So let's show the video one more time, and I want to talk about this. So you're choosing where your car is going to be repaired, right, Matt?
Yep.
And it shows some reviews, like the star rating of the repair shops, and you're literally getting this done in 30 seconds.
Yeah.
It's really fast. And at first I wondered, okay, why are you having to choose the color of car you have? And that's because like there may be some parts that are needed to be ordered. There might be some external damage, right?
Well, I think that's actually for the tow truck person, if I'm not mistaken.
Ooh, okay.
Because it says so we can find you easily.
Oh, okay, I gotcha.
But yeah, still, they should have that information on file. I would think so.
Yeah.
Like maybe that's one improvement, that they could have.
Just double checking you haven't repainted it or
That's
wrapped
true.
it
Yeah,
or
with
anything like
the
that.
Cybertruck wrap in particular, that could be a thing.
Yeah, so you want it to be seamless as possible. This gives you more value for the customer. It creates wow experience and good vibes with your customers. So I wasn't dripping in this video, but
well, and it's at the last thing that I know you want to wrap it up, but like on top of like a better customer experience, is at a lower cost because like that was all an AI chatbot that was doing all that and handling
yeah,
it and processing it in their systems.
you're not talking with someone on the phone to do it.
Exactly. So, Lemonade's going to be able to like that thing that they just developed can scale up to serve, a company that's doing 50 billion in premium as opposed to Lemonade doing 1 right now. So it's just, these advantages really will compound and like a better customer experience at a lower cost that is scalable. Like that is like a win-win-win.
Mm-hmm. Love it. So we're going to wrap it there. He's Matt Smith. I'm Bradford Ferguson. We're with Rebellionaire. You can find us at rebellionaire.com. And with that, I'm going to say bye for now.
Bye-bye.